Hi, my name is Jim Ripple. Welcome to day 3 of our video mini-series, How to Reduce or Completely Eliminate up to 100% of your income tax, and with those savings, build wealth and a tax-free retirement. Yesterday we went over the first strategy that eliminated taxes, but that was just for business owners. Today we're going to show the second strategy, and this is for both business owners and a W-2 employee. So what are we doing here? We're actually going to take advantage of the IRS code in depreciation. So we're going to purchase heavy equipment, and we're going to fully depreciate the first 1.2 million. And then after that, we get bonus depreciation of 60% bought in 24, and then the remaining 40% is depreciated evenly over the next 4 years. We create an LLC, invest in certain equipment and vehicles. Now this is think of bulldozers and cranes and heavy equipment like that. Think of United Rentals or Suncoast Rentals. And what they do is they lease out this equipment to contractors and bridge builders and highway builders and those things. So we're going to accelerate the depreciation, potentially offset 100% of your income with this. The equipment is not for you to use. Okay, so you'll buy it. It's titled to you. It'll be rented, housed, and maintained for you. Think of purchasing an Airbnb and have a property manager. Any individual or owner can use this to completely offset any type of income. But also think about capital gain taxes of a sale of a business or a property, or rental properties or commercial properties. But one other thing you can use this for is if you've got a lot of money in a pre-tax IRA and you'd like to convert it to a Roth so that it grows for forever without taxes, we can do it without any loss of your principal. So we do this using leverage. Most will put 10% down and borrow 90%. This provides the best rate of return. You need as little as $100,000 to create $1 million write-off. That's a 10x in deductions. Again, that's one thing we strive for. So how's the debt structured? It's a commercial loan that's personally guaranteed. It will not affect your personal credit. It's a structured loan over at 9% over 10 years amortized. The monthly payments are not going to be made by you. They're going to be made from the rentals of the equipment. So somebody making $1 million in California or New York State will pay about $432,000 in federal and state income taxes. Or they could buy $1 million worth of equipment and invest $100,000 net. So that would leave them $332,000 after the purchase of the equipment in savings. Now that $100,000 is not lost. It's just an asset, a down payment that'll come back to you. And while it's out there in this program, you're also paid 18% paid monthly, 18% annually paid monthly on your $100,000. So that'd be an additional $1,500 a month in income. And over the course of 5 years, it would be $90,000 worth of interest income just on your down payment. So their equipment rental program is now in its 9th year, and it also has a partnership with a company that actually buys the equipment back after 5 years. The 5-year program is the normal one. The debt payments, though, are not paid by you. They're covered by the monthly cash flow of the equipment. When the company is bought back, the owners get their investment capital plus enough to repay the loans. There's about 700 equipment owners under this program. The minimum purchase is $300,000. That's why we really tell people that you need to be paying about $100,000 in taxes to make this worthwhile. So here's how it would work for somebody who wants to eliminate $600,000 worth of income. $600,000, a down payment of 60% at a 9% rate is a $69.26 in monthly payment. But you're not making that payment because you're receiving monthly rent, and that would be $7,800, so more than covering the loan payment. And also you're receiving $874 or $52,000 over 5 years on your $60,000 down payment. So you made money even on the down payment. So the savings after the first year, $222,000 in tax savings. If you invested that at 8% at the end of 5 years, that would be worth $326,000. plus the $52,000 that you received interest income, total gains of $378,000. Now, when we sell the equipment back after 5 years, we get a recapture of some of that depreciation. And in a 5-year purchase buyback, it would be $408,000, but depreciation recapture max tax rate is 25%. So we'd owe $102,000 in taxes that year. So our total net gains on doing this for the 5 years is $276,000. But why would we pay that $102,000? We would just purchase an additional $102,000 in the year that you have the equipment bought back. So you can eliminate that too and keep your gains at $378,000. So that's our second program. Tomorrow we'll discuss the third one, and that one is also available to W-2 income earners and business owners. Look forward to seeing you again tomorrow. Have a great day.